finance has got a lot to do with climate change in large measure, because in order to go down to net zero, to manage climate change, to manage the problems of resilience, we have to invest. We have to invest quite a lot. Investments with tremendous returns in all sorts of ways, including cities where we can move and breathe, much more efficiency, ecosystems which are robust and fruitful, but investment. And that investment has to be financed. It has to be financed in a way that manages, reduces, and shares risk. And they're going to have to be very big flows, particularly from rich countries to poor countries. And they will be flows of bilateral public finance from the aid agencies, country by country, multilateral public finance, the multilateral development banks, for example, and of course, very importantly, private finance. And private finance is very sensitive to returns and to risk, and managing that risk, getting the finance in ways, equity, guarantees, and so on, long-term loans, which manages that risk, will be very important. Well, one thing that I want to emphasize is the famous $100 billion a year, which is intended to flow from rich countries to poor countries. That was first raised, and I was involved in that, in COP15 2009 in Copenhagen. It was actually agreed the year later, COP16 in Cancun in Mexico. It was embodied in the Paris Agreement, COP21 of 2015. That is a total public-private. It has not yet been achieved. It probably will be achieved next year. But the fact that it hasn't been achieved has been a really sore point in this whole story. It's starting to pick up. The private sector is starting to move much more strongly in various ways. But that 100 billion has been a sore point, and understandably so, because the poor countries see it as a breach of trust, that what was promised in terms of financial flows, rich countries to poor countries, associated with public activity, but some of it private, mobilized by public activity, that has not been realized. Well, I hope that 100 billion issue will be settled and there'll be clear commitment. And it's perfectly possible now, because we're close to get that 100 billion in place during 2022. Then we can lift our eyes in COP26, and we are having those discussions already, of course, to the public and private flows by mid-century capable of supporting the very big investments that we need. We want a big step up from the rich countries in terms of their bilateral flows. Now, I hope that we aim for $60 billion a year in those bilateral flows by 2025. The US has already upped its offer in the UNGA meetings, UN General Assembly meetings in September in New York. So I'm hoping that other countries will also up their offer, and we could get to that promise by 2025, around 60 billion a year. The multilateral development bank should do much more, and I'm hoping we can get the commitments from them to do that. And finally, if those flows from the public sectors come, they can help manage the risk to trigger very large private sector flows. But that risk has to be managed for those private sector flows to appear. So we need the public commitments for 2025. We need the multilateral to step up. We can see the private sector firms looking to make those investments if the risk can be managed. And we must be very clear that the 100 billion will be achieved in 2022.